最近浦发银行全员降薪20%，引发了员工集体罢工，甚至还有人降低到了最低工资2590。要知道，这可是在上海啊，这事儿真是活久见啊！我们都知道，银行一直都是高薪的代表，为什么突然就降薪了呢？这到底是怎么回事呢？根据某股份银行人员内部人说啊，银行对于员工的工资发放是根据市场调动的，业绩好呢就多发一点，业绩不好大家就少拿一点。
The man filming the video explained that it is normal for wages to fall when the banking business isn't doing well. Indeed, as early as 2022, there were reports that wages had noticeably declined in many places compared to previous years, with some seeing wage cuts exceeding 50%. Some base-level employees in certain banks could only get the minimum wage, and in some extreme cases, bank chairmen saw their annual salaries drop from 600,000 yuan to just 60,000 yuan.
降薪已经降到金融口了。先是昨天爆出有员工工资从2万多降到不到7000，今天呢爆出浦发的员工在陆家嘴浦发上分大厦前是集体罢工了，而这其实只是银行业降薪的一个缩影。最近一年金融业裁员降薪潮啊是一波接着一波，金饭碗已经没有过往的含金量了呢。
为什么呢？
这是受大环境的影响啊，银行的钱放不出去。
The woman filming the video revealed that real estate infrastructure once accounted for 40% of China's GDP. The current real estate downturn is bound to affect almost all industries, especially banking. A circulated online document, allegedly a salary reduction notice from SPDB, shows that the salaries of regular employees in the credit card center have been cut by 50%, while those of supervisors and above have been reduced by 40%. An internet user claiming to be an employee of SPDB mentioned that his monthly salary was suddenly reduced from 20,000 yuan to 6,000 yuan, which led him to join the strike. Photos online show seats plastered with A4 papers printed with the word strike. According to insiders cited by mainland media, the spark that ignited the strike was a policy change by the bank's credit card center, which transitioned regular staff to outsourced positions, causing dissatisfaction among the employees. As for rumours of SPDB's wage cuts, the source stated that there have already been 2 rounds of comprehensive wage cuts in the near term, with the senior management experiencing reductions year by year. In recent years, it's not uncommon for the salaries of Chinese banking employees to be reduced. The wage cut at Shanghai Pudong Development Bank is merely the tip of the iceberg. Data shows that among 42 A-share listed banks, the average salary of employees in 21 banks has decreased, with the decrease exceeding 10% in some cases. Specifically, SPDB's average salary in 2022 dropped from 458,800 yuan in 2021 to 454,600 yuan. Worth noting is the recent downward trend in the remuneration of bank executives. Among the 42 A-share listed banks, 22 saw a decrease in the annual remuneration for their management in 2022 compared to 2021. Bank executives in China also face the issue of unpaid wages. In Jianping County, under the jurisdiction of Chaoyang City in Liaoning Province, a deputy branch manager of a local rural commercial bank, due to prolonged non-payment of performance pay, could only receive a few hundred yuan a month, making it hard for him to make ends meet. In order to cope with his living expenses, the deputy manager was forced to take on a part-time job outside. However, when the bank learned of his part-time work, they fired him without paying the performance salary owed to him. Infuriated, the deputy manager took his former employer to court, demanding the payment of his overdue performance wages. In his lawsuit, the deputy manager claimed that he was receiving only a few hundred yuan a month. In 2022, the bank owed him more than 36,000 yuan in performance pay. The court ruled that due to the bank's regulations, which included penalties for leaving the post without completing the contract term, withholding the delayed performance pay was not a problem and thus dismissed the plaintiff's claims. The case attracted wide publicity, with many netizens lamenting the economic downturn in China, from which even bank deputy managers aren't spared. This case also sheds light on just the tip of the iceberg concerning the delayed wage payment problem in China's banking industry. Not only the county-level rural commercial banks, but larger banks like Bank of China also have such regulations. They defer the payment of over 40% of the performance salary for employees who undertake major risk and those responsible for risk control. Banks such as Minsheng Bank and Guangfa Bank even defer no less than 50% of the payment. How long is the deferral period? No less than 3 years. If 2/3 of the salary is performance pay and half of the performance pay is delayed for 3 years, this means that at least 1/3 of this year's total salary won't be available until 2025, and that's without interest. If the bank employee leaves during this period, the deferred performance pay is forfeited. In addition to performance pay, the base salary of commercial bankers typically does not exceed 35% of their income. After paying for pension insurance, health insurance, unemployment insurance, work injury insurance, maternity insurance, and housing provident funds, the actual monthly income on hand is indeed not much. As a result, situations can occur like the one involving the deputy branch manager of a rural commercial bank in Jianping County of Liaoning Province, who had to take on part-time work. If performance pay is delayed for several years, it can cause significant distress for some individuals. China's economy is in decline, and both national income and consumer spending power are on a downward trend. Recently, many Chinese banks, faced with the operational difficulties, have chosen to scale down. According to a report by mainland media on July 11th, financial license information published on the website of the China Banking and Insurance Regulatory Commission shows that from January 1 to June 30 this year, approximately 1,200 bank branches in China announced the termination of their operations. These include state-owned banks, joint stock banks, small and medium-sized banks, rural credit cooperatives, etc., and the type of outlets being shut down include branches, community branches, small and micro branches, sub-branches, and more. In fact, the closure wave in China's banking industry began as early as last year. In 2022, approximately 2,400 various bank branches closed down. In comparison, the scale of bank branch closures this year is basically on par with last year. An analyst in the banking sector at a securities firm noted that for banks, operating each branch entails considerable financial and human resource costs. In recent years, as major banks have been pushing for online banking and apps, the closure and transformation of some branches are expected. With the widespread use of mobile payments, the number of physical branch customers is dwindling, and the reduction of banks' offline outlets is an inevitable trend. However, Chinese financial scholar He Jianbing pointed out that online payments such as Alipay and WeChat Pay started being used more than a decade ago, so this is not the fundamental reason. The primary issue is that banks' profitability has declined. Shrinking branches and reducing staff can also cut expenses, but the root cause lies in China's sustained economic downturn. He Jianbing explained, in mainland China, indirect financing is the main approach, meaning that all economic entities across the country rely on bank financing. A downturn in the overall economy will also lead to a decline in bank profits. When banks see no signs of economic reversal or rebound, they might as well withdraw their branches. Under this context, the pace of the closures has accelerated. Previously, Fitch Ratings openly stated that due to weak loan demand and narrowing net interest margins, the Chinese banking industry will continue to face pressure on revenue and capital replenishment in 2023. Bloomberg reported that Chinese local banks have weaknesses in both assets and liabilities. They have made substantial loans to non-competitive local companies and government-favored projects, leading to non-performing loans. In terms of liabilities, they have poorer ability to attract stable deposit funds and are more dependent on unstable capital market borrowings. The pandemic has exacerbated the banking industry's predicament. Smaller banks in China are more susceptible to the impact of local government debt and small business loans, and these loans have been most affected by the real estate market collapse and the economic fatigue caused by the zero-COVID policy. Low interest rates have squeezed their net interest margins, causing them to struggle financially. During the economic downturn from 2012 to 2016, small regional banks attempted to extend non-performing loans to survive, however, gradually increasing risk. Xu Jingchen, an analyst at Jefferies Financial Group, said that a similar pattern is unfolding as the health of small banks has worsened following the economic downturn caused by the pandemic. A considerable number of companies have deteriorated financially, and they may no longer be able to repay their loans, so smaller regional banks have become more vulnerable, Chen said. These vulnerabilities are now surfacing. According to data from a Fitch Bohao report, as of the end of May 2023, there were 57 Tier 2 capital bonds that were not redeemed, involving 48 banks in 13 provinces, with a total amount of 36.5 billion yuan, raising speculation of insufficient funds. Research by Sinolink Securities reveals that from 2017 to 2022, about 44 small banks chose not to redeem their Tier 2 capital bonds. Analysts suggest that if a bank does not exercise its right to redeem, the capital supplementation efficiency of its Tier 2 capital bonds would decrease annually. Therefore, non-redemption is not a common scenario, and investors usually expect the bank to redeem the notes on the first redemption date. A bank's choice not to redeem may stem from pressure on its capital adequacy ratio, the impact of rising bond issuance costs, and it may also reflect that some banks have been under significant operational and non-performing asset disposal pressure in recent years. The persistent sluggishness of the Chinese real estate market is also causing the risk in the Chinese banking industry to expand. A recent PwC financial analysis report on listed Chinese banks showed that as of the end of 2022, the non-performing loan balance of China's 40 listed banks increased by 8.8% compared to the end of the previous year, reaching 1.8 trillion yuan, approximately $262.3 billion. The non-performing loan ratio dropped 0.03 percentage points to 1.33% from the end of 2021. The overdue loan balance grew 12.6% to 1.88 trillion yuan, approximately $272.5 billion, with the overdue loan ratio slightly increasing to 1.38% from the end of 2021. These 40 listed banks include 6 large commercial banks, 8 joint stock commercial banks, and 26 city commercial banks and rural commercial banks, accounting for 75% of the total assets and 84% of the net profits of China's commercial banks. In the banking industry's non-performing loans, due to the default risk of some property enterprises, the rising real estate-related non-performing loans ratio in China's listed banks is becoming a major risk faced by the banking industry. According to statistics from the China Real Estate News, in 2022, among Chinese banks with the largest scale of real estate loans to businesses, the balance of non-performing real estate loans increased by 61% year-on-year. The real estate non-performing loans ratio reached 7.23%, an increase of 2.18% compared to 2021. Laxi, the agricultural bank of China with the second largest portion of investment loans, had a balance of 46 billion yuan, approximately $6.7 billion in non-performing real estate loans, a year-on-year increase of 63.4%. Its non-performing real estate loan ratio was 5.48%, up 2.09 percentage points from the beginning of the year. In addition, banks with excessively fast growth in non-performing real estate loans last year included Ping An Bank, Bank of Communications, Zheshang Bank, China Merchants Bank, China Everbright Bank, and China Construction Bank, all had their growth rate exceeding 145%. Jiang Jingliang, the president of China Construction Bank, recently stated that last year was particularly challenging. Amidst the shock waves of the downturn in real estate, the rising non-performing real estate loan ratio has become a common challenge for the banking industry. Mitigating financial risk in real estate has now become an urgent task. According to the risk assessment of the People's Bank of China (PBOC), as of the end of 2021, approximately 7% of Chinese-funded banks were poorly rated. In January of this year, Xun Tianqi, the director of the PBOC's Financial Stability Bureau, issued a warning stating that banks might cover up risk by window-dressing non-performing assets and fake capital injections. He also said that they would closely monitor institutions close to the high-risk rating. Chen Jiwu, a professor of finance at the University of Hong Kong School of Business, said if there is no meaningful mini-boom in the economy, more local banks will face risk and endure tremendous pressure.